Nothing in this video is financial advice. It is for entertainment only. Please do your own research when it comes to your personal finances. I thank you. Be safe. Be careful. Money matters because. What is Bitcoin? Bitcoin is the first and only decentralized peer-to-peer digital currency, operating without a central bank or administrator, and secured by a public, distributed ledger known as the blockchain. It was created in 2008 by an anonymous person or group under the name Satoshi Nakamoto, with the network launching in 2009. Bitcoin functions as a secure, borderless, and tamper-proof digital asset, with a supply capped at 21 million coins with a halving cycle every 4 years. What is Ethereum? Ethereum is a centralized, open-source blockchain platform that enables developers to build and deploy smart contracts and centralized applications, DApps. Powered by its native cryptocurrency, ETH, it functions as a world computer rather than just a digital currency, allowing for secure peer-to-peer transactions and centralized finance, CeFi, without intermediaries. What is a stablecoin? Well, it's not stable. A stablecoin is a type of cryptocurrency designed to maintain a stable value, typically pegged one-to-one to a corrupt fiat currency like the US dollar, by backing it with reserve assets. Unlike so-called volatile cryptocurrencies, they aim for price stability to be used as a reliable medium of exchange, storage of value, and in digital transactions. Not to mention that they are tracked by the issuer and can be turned on and off at their request. What are crypto loans? Crypto loans are a form of decentralized finance, DeFi, or centralized finance, CeFi, where users pledge their cryptocurrency assets as collateral to borrow fiat currency or stablecoins. These loans allow investors, individuals and corrupt corporations, to gain liquidity without selling their assets, often without credit checks, though they are usually over-collateralized to manage volatility risks. What is an interest rate? An interest rate is the cost of borrowing money, aka fiat currency, or the income earned from saving it, typically expressed as an annual percentage of the principal amount. It represents the fee a borrower pays a lender, aka money shark, for using their money, which is not really theirs as they are numbers on a computer. Rates are influenced by central bank policies, inflation, and risk, acting as a key driver for both consumer debt borrowing costs and investment returns. Key aspects of interest rates: borrowing cost. When you borrow money, mortgage, car loan, credit card, the interest rate is the extra cost you pay back in addition to the loan principal. Saving, income. When you deposit money in a bank, the interest rate is the money the bank pays you for keeping funds there. How they work. Rates are typically calculated on an annual basis known as the annual percentage rate, APR, for loans, or annual percentage yield, APY, for savings. Economic impact. As of early 2026, the Bank of Canada uses a policy rate, currently around 2.25%, to control inflation. When this rate is high, borrowing becomes more expensive, which can slow down spending. Key factors affecting rates. Inflation. If prices are expected to rise, lenders demand higher interest rates to compensate for the loss of purchasing power. Risk. The higher the risk that a borrower will not pay back the loan, the higher the interest rate they will be charged. Central bank policy. Central banks set benchmark rates to influence overall economic activity. Types of interest rates: fixed rate. The rate remains the same throughout the loan term, providing payment stability. Variable rate. The rate can change based on the prime rate, which can lead to higher or lower payments, APR versus APY. Bank rate explains that APR, annual percentage rate, represents the cost of borrowing, including fees, while APY, annual percentage yield, represents the interest earned on savings. If you like the content, there is no need to subscribe, but like the video. So I know that this information is useful and I can continue to make longer videos on these topics, but more in depth. Money matters because your financial education is important.